You repeatedly mentioned having an accountable plan, but I didn't understand what that meant. Exactly what is this? How is it formed, described, executed? What should the plan address? Okay, an accountable plan, in a nutshell, has to be entered into between an employer and an employee. And the accountable plan is going to say, you account for certain expenses and we're going to reimburse you for them.
Whereas a non-accountable plan is usually some kind of allowance that you're giving your employee. I'll give you $1,000 a month for
a car. Yeah. So here, yeah, that's a great example. But the accountable plan is not taxable to the recipient. So if I give you $1,000 for a car and I say, hey, we're going to give you a $1,000 car allowance, that's taxable to you. Still deductible to the employer, but it's taxable to the recipient. And the employer feels really benevolent, but really what they did is they gave you $1,000. In an accountable plan, we say, hey, turn in your mileage and we're going to reimburse you, 54.5 cents a mile. You don't pay tax on it and we get to write it off.
And it's the same for almost any reimbursement that you're going to do between yourself and your employee, or between the company and the employee. Mm-hmm. Your medical reimbursements, they need to show you evidence of their medical expenses for it to be an accountable plan.
Yep. Now here's where it gets really fun. Now, so this is really important, by the way, guys. The reason I talk about accountable plans is because they're only available if you're the owner operator. You've got to be an S corp or a C corp.
Right.
It does not work if you're a sole proprietor or a partnership. And I say that till I'm blue in the face, but accountants sometimes just refuse to get this. It's like, no, an accountable plan has to be an employer-employee relationship. You cannot be an employee of your own sole proprietorship. You cannot be an employee of your own partnership. You're either the proprietor or you're a partner in those situations. If you want to be an employee, you're an S corp or a C corp, or an LLC taxed as an S corp or a C corp. All right, so that out of the way. Now, the accountable plan could do things like reimburse you for your cell phone. And you don't have to pay any tax on it as long as it's at the convenience of the employer. It can do things like reimburse you and say, hey, we need you to have a computer, so we'll reimburse you the computer. We need you to have a home office, so they reimburse you for the use of your home. Hey, there's lots of little things that become deductible when you have an accountable plan. And it does have to be in writing, and it has to be something that is can't discriminate. It has to be for people that are doing certain activities. So I can't decide to be willy-nilly and just give myself a huge amount of benefits and hose everybody else. No, you're giving it to your employees, and you're saying, hey, if you're in this category, like if you're somebody who travels, then I'm going to reimburse your cell phone and your computer and reasonable internet and any of your expenses while you're out on the road. If you have to get meals and lodging, then we'll reimburse you for those. Mm-hmm. If you have to use your car, we'll reimburse you for that. If you have to rent a car, we'll reimburse you for that. If you need to get plane tickets, we'll reimburse you for that. All those things become reimbursable. Isn't that fun? And by the way, somebody says that is available on the portal. No, it's actually in our document. So when I create a plan, when I actually create the entity, that's part of your organizational meeting almost always. I always do it for you guys if you're one of our clients.